It's 5 a.m. in New York City. Good morning. I'm Danny Berger, in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know this Thursday. Stocks rise after nearly 2% drop in the Nasdaq 100 as investors look ahead to the latest inflation print. Plus, we get rate decisions from the ECB and the BOE. Meanwhile, President Trump lays out plans for holiday bonuses and housing reforms as he attempts to ease price anxiety. And Micron out with an upbeat forecast, citing surging demand and supply shortages, allowing the chip maker to flex its pricing power. And maybe we needed some of that good news for tech today after, as I mentioned, we saw a big drop in the Nasdaq 100 yesterday. Futures up 0.8%. Oracle rebounds after trading at a 6-month low yesterday. Those fears were apparent in this market. The S&P also rebounding after 4 consecutive days of declines, up 0.4%. For this bond market, we also get some buying on its way. We're down by 2 basis points for the 10-year yield, 2-year yield, 30-year yield goes down by 1 basis point. A lot of events today. You have CPI, ECB, BOE. By the way, we're going to speak with Kallum Pickering of Peel Hunt later, who basically says all of those will be nothing burgers. We'll see whether that's the case for this market, too. In the meantime, let's get you some stocks to watch this morning. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start with maybe the reason why we're seeing this positivity in the Nasdaq futures this morning. Micron higher by 10% after their earnings. They gave a very rosy revenue forecast for next year. And it's really this backdrop of memory chips, which Micron is known for making, essentially having an issue where demand is outstripping supply. The CEO saying on a conference call that they're only able to fulfill around 50% of their key customer orders. And that comes after warnings from Dell and HP that we might see a memory chip shortage next year. So Micron shares trading higher this morning, dragging the Nasdaq with it. Let's move over to the retail sector. Lululemon, new news here. We have Elliott Investor, the activist investor Elliott Management, taking a $1 billion stake in the company. We're seeing shares trade higher by 5.25%. Danny, they might be bringing a new CEO with them. That comes after Lulu announced just earlier this week that their CEO will be stepping down in January. Lastly, I want to talk a little bit about the energy sector. Sable Offshore. This is an offshore driller based mostly in California. Understood that they have a key pipeline that has now been regulated under the interstate rules to be regulated by the looser regulations of the federal government versus the more stricter regulations of the California state. So we're seeing shares of Sable Offshore leap higher by 37% in the pre-market trade. Danny?
Valerie, thank you for those, and we'll catch up with you later in the program as well. And also coming up this hour, we're going to drumbeat to CPI data. As I mentioned, Kallum Pickering of Peel Hunt will be joining us. But first, let's get right to the primetime address from President Trump last night.
Here at home, we're bringing our economy back from the brink of ruin. The last administration and their allies in Congress looted our Treasury for trillions of dollars, driving up prices and everything at levels never seen before. I am bringing those high prices down and bringing them down very fast.
Joining us now from Washington, D.C. is Mika Solner of Bloomberg Government. Mika, this seems to be a theme in this White House as of late, a hyper-focus on affordability. How far did President Trump go in trying to either explain or address those concerns? And I don't think we have Mika at this moment, so we will try to fix that setup and get back to her. But again, just a recap, President Trump last night, a primetime address, blaming some of the issues of inflation and affordability on past administrations, saying that he's going to be issuing a check to military families of $1,776 and would have housing reforms and would get a Fed chief into the government that is able to lower rates. We'll get back to that story when we're able to, but and let's do that now. It seems that Mika, I believe we have our sound back, Mika. I think you can hear us now, and hopefully we can hear you. Just give us what the upsum was of this speech from President Trump. I was just mentioning some of it, but how far did the president go in trying to address the issue of affordability?
Yeah, absolutely. Sorry about that, Danny. The president knows that affordability is an issue for the administration. This has been a sore spot for months as Democrats try to use this as a political talking.
It looks like we've lost Mika again. We'll try to get that, try to get some of that reestablished. For now, though, Let's turn over to the story in Europe, because pressure is mounting for the EU to approve a loan to Ukraine without the support of Belgium. Bloomberg spoke exclusively to the EU Foreign Affairs representative.
As I see it, Belgium is under a lot of pressure from Russia, from all of Europeans, also from United States. And in order to, release that pressure, we should do the European legislative proposal.
And that is the latest. Again, there's a question as to whether this proposal will go through, the Mercurial proposal, and where the EU stands on this and how they push it through without Brussels. All right, let's get a quick check on your markets again this morning, because we have a lot going on between the different things of Trump trying to address affordability and what we are doing with different rate decisions. The S&P moves higher this morning by 0.4, Nasdaq 100 by 0.7%, and Russell 2000 moving up by 0.3%. Again, we're going to get CPI, but we're also going to be getting ECB and BOE decisions. Let's get some other top stories that are trending on the terminal this morning. U.S. prosecutors have charged the founder of bankrupt subprime auto lender Tricolor with conspiring to defraud lenders and investors. The indictment accuses executives of using various schemes, including double pledging auto loan collateral and manipulating loan descriptions. Tricolor filed for bankruptcy in September after shutting down over 60 locations across the U.S. Southwest. By the way that they found the fraud was a junior analyst at one of the lenders, not even one of the big ratings agencies. More money for OpenAI, that's according to the information. The maker of ChatGPT is said to have held funding talks with investors to raise tens of billions of dollars at a valuation of $750 billion. All of this coming after a report that Amazon is looking to invest $10 billion and sell its chips to OpenAI. And China has secured at least 7 million tons of U.S. soybeans after heavy buying in the past 2 weeks. It had passed the halfway mark towards meeting its 12 million ton purchase agreement with the Trump administration. China is yet to confirm the details of its deal with the U.S. Let's get back to another potential deal, and that is what's happening in Ukraine. Joining us now in Brussels at the European Council is Bloomberg's Ollie Crook, who is interviewing the EU foreign minister. Ollie, where does the EU stand as these talks begin?
I think that walking into this meeting, no one really has an answer to that question, Danny, which makes this meeting quite exciting, but also quite worrying if you're sitting in Kyiv and awaiting a 90 billion euro loan that will finance your war effort, but also your economy, 2/3 of that entire budget for the next 2 years, waiting in the balance. When I spoke to Zelensky just a month ago, he said that for them, getting this money over the line from the Russian assets is a matter of survival, and we have heard a vast panoply of different opinions walking into this chamber. We just heard Emmanuel Macron walk in. He said that there will be a deal of some description. There will be an explanation of some kind of how Ukraine will be funded, but not necessarily through the Russian assets themselves. We've heard from the Belgian Prime Minister speaking to his own parliament this morning. And remember, this is a decision that ultimately will come down to the Belgians. They have been blocking any European action on these Russian assets. They're not yet convinced of the legal safeguards that the country Belgium would get in order to move on these assets. That's where those assets are being held. And that is going to be the main debate here. We heard from Friedrich Merz, the Chancellor of Germany, when he was walking in. He says there's basically no other option. They talk about potentially issuing Eurobonds, doing joint debt at the European level. But Danny, you know as well as I do that that is probably the only issue that is more contentious than seizing these Russian assets. So going into this meeting, I'd say this is one of the most important EU leader meetings we've had in quite a number of years, and we really do not know which way the story is going to go.
It feels like that's been the case for so long, Oliver, that we've been at a stalemate with difficulty in actually getting an agreement done. So what happens in this case? What happens in the conflict if the EU can't agree?
Well, I think, Danny, there's a lot of different things that happen. The first priority is going to be getting that money to the Ukrainians. As you know, the French government's falling every 5 minutes because they don't have enough money in their budget to service their own needs. It's hard to imagine, them being able to pay for issues like funding the Ukrainian military for the years in the future. And that's the case for a number of different European countries. That will leave potentially funding from the European budget. There's not a huge amount of headroom there, which will then enter this conversation about joint debt at the European level. And Danny, as you know, know from your time in London spending covering European politics, that is one of the most contentious issues that we get here in Europe. So as far as, many of these leaders are concerned, really the only path forward is with the Russian assets. But I think it would add yet another sort of echo to this narrative that we're hearing from the Trump administration that Europe is basically in decline, it doesn't have its act together, and is basically weak. If they can't get this over the line, what good is it to hear from European leaders every day for the last 4 years, we need to support Ukraine, and when it comes to putting their money where their mouth is, they fail to do so?
Actually, Oliver, that's a good point, because there has been an attempt of pressure from the White House and a lot of American barbs thrown over Europe's ways. To your point, Trump warning about a total collapse of civilization. Is the U.S. playing any part in continuing to pressure, let's say, Brussels to get an agreement done?
There is definitely pressure from the Americans. The pressure that originally came from the Americans from the Biden administration was to move on those Russian assets and actually do that very quickly. The Europeans were too reticent to do that a couple of years ago. Ever since Trump came in and says, listen, we're done writing checks for Ukraine, Europe, you figure it out, that's when this debate was really sort of resurging here. But we've heard under the Trump administration that actually there has been pressure from the Trump administration on a number of countries within Europe, including the Belgians, basically saying, don't touch the Russian assets. We want the Americans to basically govern what happens there. We want that part of our own trade negotiation, our own peace deal with the Ukrainians. So they're coming under pressure from the Americans to not move on these assets.
Oliver, thank you so much for your excellent reporting. That's Bloomberg's Oliver Crook. Coming up on the show, we're going to count down to the BOE and ECB rate decisions. Stay with us. You're watching Bloomberg Brief. You're watching Bloomberg Brief. I'm Danny Berger in New York. The Bank of England is expected to deliver a pre-Christmas interest rate cut later today. The focus shifts away from inflation towards the UK's struggling economy and jobs market. Joining us with the latest on this rate decision and the ECB is Bloomberg's Lizzie Burden. Lizzie, set it up for us. How dovish a cut are we expecting?
Well, the expectation, Danny, going into this was that you'd have a 5-4 vote split on the Monetary Policy Committee. But then we had that weaker than expected UK inflation print yesterday. So actually, you could see more doves joining the rest of them. And it's set to be the Bank of England Governor Andrew Bailey, who was going to be the knife edge vote decider. But he could have some more backers this time. That split, that CPI print, of course, made traders add to rate bets for next year. Let's see if the guidance today encourages them even further. I don't think they're going to drop the language about the easing ahead being gradual, but I'm also interested to see how they assess that latest UK budget from Rachel Reeves, because she did loads of measures to try and weigh on the cost of living. Does the Bank of England think that that'll have a long-term effect, suppressing inflation expectations? Also interesting that you've seen growth contracting in the latest GDP figures for October. Does the Bank of England actually revise down its outlook for Q4 2025 off the back of that? And it comes back to the Chancellor again because of all of that speculation, Danny, leading up to her budget.
It's a busy time in that region, Lizzie, because we'll also get the ECB decision, 8:15 a.m. New York time. Any surprises expected?
Well, I must say, if I'm picking between the two, this is likely to be the more boring one, but do keep an eye on the press conference. They're expected to hold, but we get forecasts from the ECB this time, and the expectation is that they'll see inflation undershooting the target over the next couple of years. So Christine Lagarde's got to balance that messaging with pushing back against, if she wants to, Isabel Schnabel's commentary that the next move is going to be a hike. You saw such a hawkish repricing off the back of that. Jens Eisensmith at Morgan Stanley says it's the equivalent to 25 basis points of hiking. So if she doesn't, or if she does, it's going to be very telling. The euro extremely vulnerable today, Danny.
Lizzie, thank you so much for that. Looking forward to your coverage of those decisions throughout programming today. Bloomberg's Lizzie Burden. Again, we'll get that BOE rate decision 7 a.m. New York time, and then an hour and 15 minutes later, it's the ECB. Let's head back to Washington, where Mika Solner, Bloomberg Government, joins us now. Mika, it's not just the UK and the ECB having their day in the sun. President Trump giving a primetime address last night. What did the president say?
Yeah, Danny, the president is really focused on his affordability message, and he knows that this is a sore spot for the administration as he continues to downplay criticism about the economy. And polls show that this is a huge issue for the White House. Trump said that he inherited a terrible economy from his predecessor, Joe Biden, continued to blame Democrats for that. Also announced military bonuses, which is a new announcement there. And then he says that people just need to be a little bit patient for the one big beautiful bill effects to kick in early next year.
Mika, can I ask about those military checks? Because Scott Lincecum of the Cato Institute pointed out that there are at least 10 different proposals with Trump has said that he's going to pay for it, be it the checks, be it a tariff dividend that specifically he'll be paying back with the tariffs. How is this really shifting? Because this is also a White House that's facing tariff threats in court and has also been pulling back on tariffs, for example, to Brazil to try to address the affordability issue.
Yeah, absolutely. I think that the White House is very cognizant of the fact that the tariffs are not always popular, at least privately right now, with a lot of Republicans even supportive of Trump. So they're really trying to make this very positive, saying that this may, raise costs temporarily, but it's in the end, it's going to bring all this revenue. So I know that they're, closely watching legal actions around this as well with the Supreme Court and everything. So this is a huge issue. Trump is very passionate about this issue. He thinks it's a matter of fairness. And so he thinks that this is one way that he can make this a positive.
Hey, Mika, thank you very much. That is Mika Solner from D.C. on the latest from President Trump. Coming up on the show, BP appointing a new CEO, replacing the outgoing chief just 2 years into the job. We're going to have more on that next. This is Bloomberg. Welcome back to Bloomberg Brief. I'm Danny Berger. In corporate news, BP has appointed a new CEO. Meg O'Neill joins the oil giant from Australia's Woodside Energy. Not only is she BP's first female CEO, she's also the first outsider to lead BP. Joining us now is Mitchell Furman. Mitchell, what's the significance and why would BP turn to outside the company to put in a new CEO after not the longest stint of the prior one?
Yeah, good morning. BP is looking to turn around its fortunes, and they announced a strategic reset earlier this year to refocus on oil and gas after years of failed low carbon bets. And while BP strung together a couple quarters of positive results recently, the new chairman, Albert Manifold, took over October 1st, and he told staff on day one that the strategic direction was correct, but that they needed to move with more urgency. And now he has moved with urgency in just a couple months, immediately appointing a new CEO.
Well, we've also had Elliott, the activist and manager, build up a stake of just over 5%. How much of this, Mitchell, is also purely just pressure from the activist?
Yeah, we received one analyst this morning said that, given that this new chairman does not have much direct oil and gas experience, it was a little surprising how quickly he moved. But because Elliott is in the shares, that this move was probably a matter of when rather than if.
So if we have this move and you have a new CEO who spent 4 years at Woodside Energy with a clear focus on fossil fuels, Mitchell, what does this mean about the lower carbon business of BP? Is this just done for? Do they have any sort of inkling of getting back to more of it? Or is this a clear shift in the company's direction, just really solidifying and putting a nail on that coffin?
Yeah, it appears to be a culmination of BP's pivot back to oil and gas. In Meg O'Neill's previous job at Woodside, she did shed some of its low carbon businesses, and so the expectation is after a long career at ExxonMobil, then building up Woodside and improving its oil and gas output, and coupled with BP's chairman saying that the oil and gas strategic direction was correct, that yes, BP will likely stick with petroleum.
And Mitchell, thank you very much for your reporting this morning. That's Bloomberg's Mitchell Furman as BP is up about 0.5% in the London trade. All right, let's look at some of the front page news, what's making stories across the major publications. First up on the Wall Street Journal, Warner Brothers is pressing Larry Ellison on bid terms. Warner wants Ellison to give a stronger personal guarantee that he's fully committed to the bid rather than relying on the trust. The message, if you want to buy the company, sign on the dotted line yourself. Warner Brothers urged shareholders to reject Paramount's hostile takeover bid. Next up on the FT, Elliott Management preparing a multi-pound flotation of bookseller Barnes & Nobles and Waterstones. The fund manager has spoken to potential advisors about an IPO and could appoint investment bankers early next year. The report says London was likely to be favored over New York. And New York Times leading with the Trump administration aiming to strip more foreign-born Americans of citizenship. An official with U.S. Citizenship and Immigration Services says that it would prioritize those who've lawfully obtained U.S. citizenship. Under federal law, people may only be denaturalized only if they committed fraud while applying for citizenship. And those are your front page stories. All right, as we head to the half-hour mark, here's where markets stand. Yields, you get a bid. Yields move lower by just under 2 basis points. We're at 413.53 this morning as the S&P future session bounces back after 4 consecutive days of losses. Does that change, though? Because coming up, it's a busy day ahead. CPI, BOE, ECB will break it all down with Kallum Pickering of Peel Hunt. That's coming up next on Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know this morning. Stocks rise after a nearly 2% drop in the Nasdaq 100. Investors look ahead to the latest inflation print plus rate decisions from the ECB and BOE. And Micron is out with an upbeat forecast citing surging demand and supply shortages, allowing the chip maker to flex its pricing power. And President Trump lays out plans for holiday bonuses and housing reforms as he attempts to ease price anxiety. Equities this morning bouncing back after 4 consecutive days of losses. Yesterday, dragged down by Oracle. This morning, pushed up by Micron, which Valerie Teitel will lay out in just a moment. You're up by 0.7% for the Nasdaq. S&P higher by 0.4, Russell by 0.33%. Meanwhile, for your bond market, they get a bid this morning. Over the past month, they have been drifting higher, led by not only concerns about the extent of the Fed to cut, but also by international bond markets also moving higher. But this morning, we're lower by just under 2 basis points for both the 2- and 10-year yield. Your 10-year yield this morning standing at 413.53. Let's get to some of those stocks to watch, including Micron. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start with Micron. Shares are flying higher in the pre-market, up over 10% after they gave a rosy outlook in their earnings release yesterday. The CEO talking about the supply and demand imbalance when it comes to their memory chips that they produce. They are still unable to fulfill all of their key customer orders. Their backlog is continuing. It does spark some concerns, though, that we could see a memory chip shortage next year. That is something that both HP and Dell have been warning about of late. But it's rosy for Micron's outlook and their earnings. Shares are up 10%. Let's move on to the retail sector. I want to talk about Lululemon. An activist investor, Elliott Capital Management, is taking a $1 billion stake in the company and might be bringing a new CEO with them, an ex-executive from Ralph Lauren. Shares of Lululemon higher by near 5.5% in the pre-market trade, and it comes just on Friday that Lululemon gave a rosy outlook, upgraded their guidance, and did announce that their CEO will be stepping down at the end of January, and that comes amid essentially a sluggish sales growth for the retailer. Lastly, I want to talk about Instacart. This is a Reuters report that the FTC is probing their use of AI pricing tools. Now, Instacart has denied these allegations, essentially saying that they are false, but we are seeing Instacart sales fall by over 6% in the pre-market trade. AI pricing and the use of AI tools has become kind of a regulatory hot point of late. Danny?
Valerie, thank you very much for your work this morning. Valerie Titel. It's going to continue to be a busy morning ahead for markets. There's a Bank of England decision at 7 a.m. Eastern. ECB comes an hour and a half later at 8:15. Finally, then we'll get U.S. CPI and jobless claims 15 minutes later at 8:30 a.m. Joining us now is Kallum Pickering, chief economist at Peel Hunt. Kallum, any of those have the potential to be surprising or at the very least interesting?
Well, it's always interesting over here in Europe. Good morning, Danny. I think the Bank of England is actually the one to watch. We'll have an uncontroversial rate cut. Money markets put in 98% probability on a cut today. I think that's probably right. Question is the Bank of England prepared to send a signal to markets that they can expect a cut as soon as February, which would be the meeting to follow? I think there's a chance we could get a dovish surprise. Central banks care about three things: inflation, labour markets and growth. And on all of those measures, looks like the Bank of England has space to do a bit more. We've got disinflation in the UK happening faster than the Bank of England and the market expect. We've had no growth since summer, and it's mainly a story of weak demand. And wherever you look in the labour market, you see weakening. Wages are coming down rapidly, vacancies are dropping off. Remember, monetary policy works with a lag, so the danger is if the Bank of England doesn't get to neutral a bit quicker, we end up with some undershoot heading into next year combined with growth weakness. So I think the bank's going to signal today we're ready to do a bit more.
Can we talk about why U.S. CPI is less instructive, Kallum? Is it an issue of just delayed data, difficulty understanding without having the month-on-month change because we lacked that other data from the shutdown? Or is it a Fed that's moved on from inflation? What makes this perhaps less significant than CPIs of the past?
Well, first, it's sort of expected. You'd need a really, really big surprise. The other thing is, we don't really have a Fed meeting now for a couple of months. And so there's a question of, well, there's nothing really that interesting going on in the US economy. Maybe things are slowing down a little bit. I think it's just a matter of timing. My hunch actually is the Fed's probably in a similar situation to the UK. I look at market pricing. It's for 2 more cuts from the Fed. I think we'll get 3 next year. I think the risk is that we get more. I don't think the Fed will tolerate a material slowdown in the US economy heading into next year once inflation has passed through. And so when I look forward, actually, I think as long as we don't get big surprises in the next couple of months' data for the US, I think the market's going to start anticipating more cuts from the Fed. So the big story is the Bank of England and the Fed are probably going to be cutting a bit faster than we expect into next year.
Maybe with a longer term or medium term picture for the Fed in 2026, Kallum, if you have a setup where the Fed is cutting, you have fiscal stimulus coming from the Trump administration, not just from the one big beautiful bill, but last night he was also talking about more housing reforms and checks out to military members, and you still have an inflation rate that's above 2%. How can inflation fall back to 2% in the face of dual stimulus? Are we undercounting the risk of sticky inflation?
I think that's actually unlikely. Generally speaking, inflation comes from 2 places. One is just a huge surge in demand where everyone just feels so optimistic that they just go out and spend. The problem is mostly that comes from the US consumer that's only saving, well, less than 5% of its income. There's not a great deal more out of income you can spend, and that income is generated through production. So the consumer's not going to generate a huge amount of inflation in the US. The second place is supply shocks. The 2 places you get supply shocks in energy or in the US's case through tariffs. That's a story of the past couple of years. So actually, I'm fairly comfortable next year that if we get to sort of 2.5% on CPI, the Fed won't be worried about a reacceleration. Of course, if there's a shock, you always get a little bit. But I think 2.5%, the market will start saying, actually, come on, Fed, give us a little bit more. We're not really happy with growth at 2% in the US. And I think the Fed will lean into that.
There are perhaps 2 corporate stories yesterday, Kallum, that back up exactly what you're saying. One was General Mills saying that they're lowering prices across 2/3 of its products in North America. The home builder Lennar saying that they're cutting prices and offering incentives to try to draw consumers in to afford a home. Kallum, these individual corporate stories, do they add up to something bigger?
Well, of course, I'm always an optimist. You know, I'm just totally optimistic on the US, almost always. I'm probably an optimist when it comes to Europe, too. The last 3 years in the US have been really important in helping us understand what the nature of the economy is. So we had a big stimulus from 2022 onwards that kept US growth at basically 3% year over year. This was a full employment economy, remember, and you didn't get huge inflation coming out of that. This was a world in which the Fed was able to cut. And so the idea that we stay at full employment but grow at 2% and have to worry about inflation risks without tariffs, I think this is not something that looks realistic. I think US potential growth is probably in the mid-2s with the AI wave. And so I think it's going to be very, very easy actually for policymakers to start feeding this growth story with rate cuts and tax cuts. And you're just going to see better growth over the next couple of years. The danger comes if you get the kind of supply shock which pushes inflation higher, just very suddenly, then the bond market starts to worry. We've had a bit of that this year. But this sort of stimulus story into next year that keeps the US economy doing okay, I think that's probably sustainable for a year or two.
Kallum, though, what if you do get the scenario where you have a BOJ and an ECB that are turning more hawkish, pressuring long-term bonds globally, and you get bond yields moving higher in the US despite a Fed and a White House that's attempting to try to normalize policy? What difference will that make?
I suspect, actually, and so I put together a chart a couple of days ago, and it slightly surprised me because we've been worried all year about upsides to bond yields in both the US and the UK. We've seen a bit of action in Japan and Germany, but actually over the course of the year, you've seen quite a decisive spread narrowing where both US 10s and UK 10s are lower than they were at the start of the year, but for Japan and Germany, they're a little bit higher. I see no reason why this story can't continue, where in the UK, by the end of next year, we're sort of 40, 50 basis points lower on a 10, say 10 or 20 basis points lower in the US, but Japanese and German bond yields have normalized a little bit, and you've had this kind of great bond market normalization heading into next year. Those aren't inconsistent stories in my view.
Hey, Kallum, we're going to have to end it there. Always a pleasure to chat with you. It's been far too long. Kallum Pickering of Peel Hunt. Let's now get you some other top stories that are trending on the terminal this morning. U.S. prosecutors have unsealed the federal charges against auto subprime lender Tricolor. Among the details that emerged, the blunder that ultimately exposed the alleged fraud was a failure to fix numbers on an Excel file. The company's founder has been charged with conspiring to defraud lenders and investors. Activist investor Elliott Investment Management is said to have built a stake of more than $1 billion in Lululemon. Sources say that Elliott has been working with the former Ralph Lauren CFO Jane Nielsen, who's said to be viewed as a potential new CEO. The struggling retailer is facing a strategic overhaul in the departure of its chief executive. In other CEO shifts, BP has selected Woodside Energy CEO Meg O'Neill to lead the company. She's the first outsider to lead the oil giant. The move makes her BP's first female chief executive and big oils, and comes as the British firm struggles to revive its fortunes after a botched pivot to renewables. Coming up, President Trump attempts to ease voter concerns on the economy and high prices. More on his primetime address coming up next. This is Bloomberg.
Here at home, we're bringing our economy back from the brink of ruin. The last administration and their allies in Congress looted our Treasury for trillions of dollars, driving up prices and everything at levels never seen before. I am bringing those high prices down and bringing them down very fast.
President Trump addressing the nation last night as he faces mounting public anxiety about his economic agenda, with voters worried about the cost of living and inflation. Back with us from Washington, D.C. is Mika Solner of Bloomberg Government. Mika, perhaps the more newsworthy item is not what Trump said, but the fact that Trump felt the need to make this primetime address at all. What does it say about either current approval numbers or how they're feeling about 2026, a midterm election year?
Yeah, the White House knows that affordability is a huge issue for them right now, even though they're not saying that publicly. But internally, privately, a lot of people in the West Wing are really concerned about this. Polls indicate that the president is really struggling on this, and voters are blaming him right now for the economic downfall, despite the fact that he's really trying to shift blame to Democrats and his predecessor, Joe Biden. I mean, he's named him so many times, but I also think it's very notable that, like you said, the president had to make a primetime address, and it was a lot shorter and more scripted than he usually is too when it comes to this issue.
Okay, so let's talk about the address itself. What did we get out of it, Mika? Are we going to see more stimulus coming from the White House in order to try to do something about affordability?
I think it's very possible that Trump is still pushing potential tariff revenue checks as well as military bonuses, which was an announcement that he made last night. I also think that we're going to see Republicans led by the president continue to say that Americans just need to be a little bit more patient while their policies start to kick in early next year. They're going to start getting tax relief and other benefits from the bill that was passed, the reconciliation bill that was passed earlier this year. And then we're also politically just going to continue to hear them say that, Democrats did this, we're fixing this, just give us some more time.
Hey, Mika, finally, also overnight, we learned that the U.S. has approved an $11 billion arms sale to Taiwan. Has there been a response from Beijing? What does this do to relations between the U.S. and China?
Yeah, I think it's really interesting, and it's going to definitely simmer some tensions here as China continues to pressure Taiwan. I mean, this is the largest arms sale that we've seen, I think, in a very long time, potentially ever. And I think that this is going to be really interesting for the president as well, who is really trying to make sure that the U.S. stays an ally to Taiwan but also working to try and have a better relationship with China in many ways, too.
Mika, thank you so much for your reporting this morning. Mika Solner of Bloomberg Government in Washington, D.C. Now, staying with President Trump's economic proposals, he's pledged to cut electricity costs in half within a year of taking office. Instead, they've spiked, and they are expected to rise even higher through 2027. Joining us now is Bloomberg's Noreen Malik, who's been reporting on this story. Noreen, I guess we can say why this is happening, right? Is this just all due to the demand that AI is putting on the electrical grid?
It's a big part of it. This particular auction and PJM interconnection serves nearly a fifth of Americans from the Midwest to the Mid-Atlantic. And prices really started to soar for this year, so an auction held last year. And the independent market monitor attributed the three auctions now since then, the two auctions since then, to big data center demand growth. And so this auction used to be, for 2 years in a row, $2.2 billion, and now it's $16.4 billion a year. Those are very quickly escalating costs. It's just one component of what consumers in these states pay, but it is very notable and become a bellwether.
Well, Noreen, as we were just talking with Mika about, when it comes to politics, there is a fear about affordability because that's how voters are voting at the moment. There has been pushback in Michigan. The Oracle data center deal with Blue Owl seems to have fallen apart in part because of politicians there raising some questions about tax subsidies for AI data centers. We also heard from Bernie Sanders earlier this week. Here's what he said in a statement. There's a whole lot about AI and robotics that needs to be discussed, needs to be analyzed. The process is moving very, very quickly, and we need to slow it down. And in part, he cited some of the concerns about not just the environment, but what's happening with prices around electricity. Noreen, are we about to get some serious pushback from lawmakers in what these data center buildouts are doing to the electrical grid?
Yes, we're starting to see that already in this election that just happened in November. The newly elected Virginia governor and New Jersey governors both ran on a platform that included making electricity prices more affordable. And it's widely expected that it will become a bigger issue in the 2026 midterm elections. Consumers are facing inflation from so many different ways, and electricity bills are something that consumers have very little control. And we're hearing from, like in Maryland, the People's Council saying that people are now making a decision between whether they're going to buy food versus paying their electricity bill. And the pushback is growing on a ground level across parts of the U.S., like the Midwest. Other data center projects have been pushed back or canceled.
Hey, Noreen, thank you so much. A really fantastic story. Bloomberg's Noreen Malik. One stock that we're keeping an eye on this morning, Micron, shares extending gains after the chip maker gave an upbeat forecast for the current quarter, and a sign that surging demand and supply shortages are allowing the company to charge more for its products. Bloomberg Tech Europe anchor Tom McKenzie joins us for more. Hey, Tom, great to see you. It's the narrative whiplash, right? One day it's concerned that AI is overhyped with Oracle, and then Micron comes to save the day after the close yesterday.
Yeah, and it's a reminder, Danny, that this is a disaggregated space, that you need to lift the hood and look at what the kind of chip makers are and what space and what role they play in the AI theme. And Micron still plays that essential role with these high bandwidth memory chips, these HBMs that you need in the data centers alongside NVIDIA's GPUs. And they are seeing still massive demand But importantly as well, the inability to supply that demand. They almost kind of apologize to their clients for this. But what that's leading to is a forecast for the current quarter where profits on the forecast are 80%, a little over 80% above the estimates. They're looking at revenues at the top end of around $19 billion, well above the estimates of a little over $14 billion. And again, profits per share more than 80% above the estimates for the current quarter. They're going to spend about $20 billion on capex to try to meet that demand. But the pricing means, because of that shortage, that inability to meet that demand, it means they do have that elasticity around price. They can push the prices up basically on HBM. They're benefiting from that. That is supporting profits. And most analysts that we've been looking at don't see the price pressures around HBM easing off, certainly through 2026. So they can continue to benefit, it seems, Micron, from higher prices on that demand and that lack of supply.
It's still the picks and shovels that are doing well, and question marks maybe around some of the use cases for other hyperscalers. And speaking of that, there continues to be this question around funding. The information reporting that OpenAI is looking at another funding round. This time it would value them at $750 billion. I suppose, Tom, maybe when this is happening in private markets, it's a little bit more easy to get some of these versus the scrutiny of public markets right now.
That seems to be the case. And it's a reminder as well that OpenAI is continuing to push for that investment. It's burning through cash. We know that, not expect to be profitable at least for a couple of years. And it follows on our own reporting, Bloomberg's own reporting, that Amazon was looking potentially at a $10 billion investment in OpenAI. We haven't had that confirmed yet. But clearly they're getting to the point where they're going to be locking in additional investment, it seems, and potentially with a valuation, Danny, of $750 billion US. So not quite at SpaceX levels, but still one of the, if not the second most valuable startup globally if we come through with that valuation. The most recent valuation was $500 billion. So we've already had that $250 billion leap if indeed this valuation is confirmed.
Can we talk about some of the funding concerns, Tom? Because it was really brought to light with Oracle yesterday, as I was talking about with Noreen, with Blue Owl backing out, providing equity for that. Perhaps the fear shouldn't necessarily be a bubble in valuations, but a bubble in financing. Tom, what does it mean if you do have some of these key players? Blue Owl has really been illustrative of the private market spending or the private capital spending that's been going on these tech giants. Can they continue at the pace that they're spending if they don't get the support from those parts of these debt markets?
Yeah, and I think this is going to be such a key question for 2026, and we expect to see a lot more issuance of debt to fund and finance this build-out, Danny. So there are going to be more moments like this Blue Owl moment. There's going to be increased scrutiny from investors looking for that trigger point, the trigger point that says, hang on a second, there is concern in the markets, there's concern amongst some of these debt providers that maybe this isn't all stacking up. And it's worth noting that Oracle has become something of a canary in the coal mine because they've committed to leases of around $250 billion, almost $250 billion in terms of lease commitments. That is way above their competitors and other hyperscalers out there. And so Oracle seems to be particularly exposed when it comes to this financing, given those commitments.
Yeah, and they are outright burning cash right now, whereas their competitors aren't necessarily. Tom, thank you so much. Bloomberg Tech Europe anchor Tom McKenzie. And that is it for me. You're going to catch me in just about 10 minutes time on Bloomberg Surveillance. In the meantime, Yahaira Anand will set you up for your trading day. That's coming up next. You're watching Bloomberg Brief.
This is Bloomberg Brief. I'm Yahaira Anand in New York. Now a look at what's ahead in your trading day. A BOE rate decision coming at 7 a.m. Eastern. Then an ECB decision at 8:15, followed by President Lagarde's news conference, plus U.S. CPI and jobless claims at 8:30 a.m. Taking a look at your micro movers, Micron extending gains after giving an upbeat forecast for the current quarter, while Lululemon activist investor Elliott set to build a $1 billion stake in the athletic wear maker. That is your Bloomberg Brief. Surveillance takes it from here.